Information relating to Bondless Blankets. Bondless Blankets is a manufacturing business that produces and sells custom-made crocheted blankets. In the past, a large stock of yarn was kept on hand to meet the client's individual requests regarding color and design. This means that the sales of the inventory would actually be random. If your inventory is moving in and out of the business randomly, what does that mean for your inventory valuation method that you would choose? The most suitable method here would be your weighted average. However, Bondley realized that this is very costly, and in reality, there are a few designs that are the most popular. She decided to change her production method at the beginning of the current financial year. She now creates ready-made blankets based on the latest designs and yarn creations from her hand-picked suppliers, buying new yarn only when existing yarn is mostly used up. In other words, the yarn that is bought and made first is sold first. And so therefore, can you see that the FIFO inventory valuation method would be most appropriate for that? Customers appreciate not having to wait for their blankets to be made and are loving her new designs, which are regularly updated. Bondley used the periodic inventory system and values her stock according to the weighted average method. Now that makes sense because we've just picked up that the weighted average suited her up until now. Periodic inventory means that when inventory is bought, it's recorded as purchaser's expense. Unlike the perpetual system, where it's recorded as an asset and then converted to cost of sales expense every time that goods are sold. Her accountant, Lauren, has suggested that she should change to the FIFO valuation method to better reflect the new movement of her stock. And we agree with this because that's exactly what we had just picked up above. We're then given information about her yarn purchases for last year, and note that this is the previous financial year. And because we are doing records only for this year, the thing that is going to be most relevant and most important is obviously going to be the closing stock. We're then given stock valuations for last year and this year, and a whole lot more additional information. Before we start using all the information, let's see what is required. Bondley has used the weighted average method of valuing stock in the past. Explain why she would have made this choice. Can you see that already thinking about it as we read the information makes it lovely and easy for us to come up with an answer now because we've actually already thought about it. We can simply point out that the stock was previously used very randomly. Number 1.2, explain the FIFO method of stock valuation and suggest why it's now more relevant. Well, firstly, the easy part is pointing out that it's first in, first out. In other words, what is first bought is what is first sold. And this is more relevant because she is using her yarn based on what was bought first. And then it was all sold before new yarn is bought. Lauren will need to recalculate the opening stock based on the FIFO valuation method. So this is where you can see that we will need that closing stock at the beginning of the year that we picked up already. Name the IFRS concept that requires the previous year's figures to be restated. If we're restating the previous year's figures, that is because we are trying to be consistent to allow for comparability. Number 2.2, recalculate the opening stock of raw materials at the beginning of the current financial year using FIFO. So we can see that is obviously going to relate to the closing stock. So we could actually make a little note over here that that's going to be used for 2.2. We need to prepare the following notes for the year. We need to do direct material costs, in other words, the raw materials or the yarn. And we need to show the note for manufacturing overheads, in other words, all the indirect factory costs. And then complete the manufacturing statement. Notice that obviously notes would always feed into this. And you can see over here, notes 1 and 2. So note 1, we can see that that was the direct material cost. So you can actually write direct material costs in here. And number 2, we can see is already shown as manufacturing overheads. We then need to calculate the total production cost per blanket. And the way that you'll do that is you'll take your total cost of production and use that and compare that to the total number of blankets that were produced. It's quite useful showing your little formulae in here, because then when we come across the information, it'll be easier to find where we need to put it. If the opening stock of raw materials had been kept at the value using weighted average, by how much would the gross profit have been over or understated for the current financial year? Now, obviously, gross profit is affected by cost of sales, and cost of sales is affected by your closing stock. So what we're going to want to do is compare the closing stock using the FIFO with your closing stock using weighted average. And that will then give you the difference, and then you can see whether your profit would have been over or understated. Suggest why it might be argued that Bondtler should have used the weighted average method to value opening stock, but FIFO to value closing stock for the current financial year. Now, we know that we've actually just gone and recalculated it, etc., because of comparability and so on. But something else that you can think about over here is the concept of fair presentation. Keep in mind that IFRS requires us to give a true and accurate view of whatever the actual situation was. And the previous stock was moving randomly. Which means that the weighted average would have been more realistic at that time. Bondtler has calculated her break-even point as 95 blankets. Show how she calculated this. For this, you just need to remember your break-even formula, which is basically all your fixed costs. Keep in mind that it's your factory and everything else, all your operating costs that you would have on your statement of income. And you would divide that by the contribution margin. In other words, your selling price minus your variable cost per unit. Bondtler made a loss of 5,000 for the year, in spite of having made more than the break-even number of blankets. Suggest how this is possible, quoting figures to support your answer. So think about this quite carefully. She made more than the break-even, so she produced more than 95, but she still made a loss. How on earth do you think that might be possible? Give it a little bit of thought. We'll come back to it. Let's now go and use the information in the order that it's given. We can see here we've got our yarn purchases, and we know already that we need to calculate the closing stock using weighted average. Sorry, using FIFO, because it was calculated as weighted average, and we need to now use FIFO. So the closing stock is 25 units. Those 25 units need to now be valued from the bottom up. We're going to say, where did those units actually come from? Now we can see that the last stock that was bought was 21 units in June at 175 Rand each, which had a total value of 3675. So that means that we're going to value 21 will be 3675 value. You can show that it's at 175 Rand. Now, since we've used up 21 of the 25 on hand, can you see that there's still another 4 left over that need valuing? And those would have come from the 20 at 171. We obviously can't use the total amount because we're not using the whole 20, but we can just say 4 of them at 171 Rand each. And then you'd be able to see that that would be 684. And then you add the two of those together to get a total value of 4359. Now, given the fact that we are revaluing according to FIFO, can you see that that is going to come and be my opening inventory at the beginning of my direct material cost calculation? We can then see the rest of the stock valuations. Raw materials, we've got the FIFO at the end. We are not going to use the weighted average calculation because we've recalculated it. So the end amount we can show here as our closing inventory of raw materials is the 570. What we can do though is now use the value of the 4175 and compare it to this 4359 to see how my gross profit might have changed. So the weighted average was 4175. My new value right now was 4359, which means that what I've done now is I've got a higher closing stock. If we'd kept it at weighted average, that means my closing stock would have been smaller, which means my cost of sales would have been bigger, which means my gross profit would have been smaller. So therefore, my gross profit would have been understated by the difference, and the difference is 184 Rand. We're then given the work in progress of 3125 for the end of the year and nothing at the beginning of the year. Those are figures that would be used in the manufacturing statement at the very end. And then lastly, we're given consumable stores. The consumable stores balances will be used to adjust the figure for your indirect materials, which is part of your manufacturing overheads. Consumable stores and indirect materials are simply two terms for the same thing. At the beginning, there was 500, and we would assume that that's been used during the year. And then we would subtract the 750 that's still on hand at the end that has not been used. We're then given transactions during the year. Invoices totaling 23711 were received from yarn suppliers during the current year. So that means that we'll need to use this as part of our purchases for our direct material costs. $7,900 was paid to couriers. 5,400 of this was for delivery of customers, and the balance for delivery of yarn to Bondtle's blankets. This means that the 5,400 was actually carriage on sales, which is an operating expense, not a manufacturing cost. So we would need to simply use the difference between those two figures as our carriage on purchases. Wages and salaries were as follows. The crochet assistant making the blankets earns 4,500 per month. If she's actually making the blankets, this is obviously a direct labor cost, as you can see her efforts in the finished product. Now, obviously, that's not going to go into direct materials or manufacturing overheads. It is its own thing of direct labor, which is part of your prime costs. If it's 4,500 per month, don't forget to say times 12 to get the amount for the year. A cleaner earns 36,000 per annum. She spends 75% of her time working in the factory and the remainder in the showroom. That would be one of my manufacturing overheads. It would be indirect labor. I will obviously take her total salary of 36,000, but I'll multiply it by only 75% that relates to the factory. The other 25% would be shown as operating expenses on the statement of income. Consumable stores costing 6,500 were bought during the year. Consumable stores are shared equally between the factory and the showroom. The consumable stores, remember, we used over here as part of our manufacturing overhead costs. So we would need to obviously add the 6,500. Now notice that the total consumable stores needs to be split between the factory and your operating expenses. You need to first do the adjustments for the opening and closing stock. Whenever you've got an amount that needs to be allocated between different areas, always first do all the adjustments for stock on hand or prepaids and accruals, etc. And only once you've taken that into account, do you then go and say times a half or whatever the percentage is that you need. Rent of 33,000 has been paid. The rent for September is still owing, and 2/3 of the premises is used for making blankets, 1/3 for the showroom. Showroom obviously refers to the shop where you're selling it, and that's why it would be an operating expense, not part of manufacturing. Rent is going to be an overhead cost. So we would show it over here, and then just like the previous one, we'll need to take that 33,000 and adjust it before allocating it. The 33,000 relates to only 11 months because September is still owing and we want 12 months. So we'll say times the 12 that we want divided by the 11 that we've actually got. And then you would multiply by your 2/3 for the factory. Because this is all multiplied, you can actually do it in any order, but it's just good to get into the habit of do the adjustment first before allocating, because if you're plussing and minusing, then you do need to do the adjustments first. We're then told that 100 completed blankets were made during the year, of which she had 10 completed blankets on hand on the 31st of August. Since she had been producing on order, there were no completed blankets on hand at the beginning of the year. So if you have a look at that, can you see that that means she made 100? We can immediately use that over here. I actually quite like to go and write it in over there so that you can see immediately, it was 100 blankets, but we can also use that over here in your calculation that 100 blankets were actually made. But now notice what's interesting is if she made 100, which is what they told us, she made more, she made 100, is more than the 95. But if she had 10 completed blankets at the end, that means that what was actually sold, your cost of sales, would have been the items, the 100 blankets times whatever the selling price is, minus the 10 blankets equals 90 blankets sold. Now notice that that is smaller than the break even of 95 blankets. And that's why she made a loss. Because quite simply, if you don't sell enough, you won't have enough revenue to cover all the costs. We can see here that the blankets are sold for 1,850 each. We can use that to calculate our break even. So where we're doing the break even calculation over here at the bottom of my formula, I can show 1,850 as my selling price. We can see that they've also given us the total fixed costs, and keep in mind that would be including your operating expenses. Always just keep that in mind. Sometimes you will need to add the fixed manufacturing cost to the fixed operating expenses. We can show that at the top. And then we're shown that the variable cost per unit is 1,150. And then we've used all the information. Now we can go back to the beginning and do all of our adding and subtracting to make sure that everything works as we want it to. Our first questions we've answered nicely. We've used the 4359 where we need to. We can now go and do all of our adding and subtracting over here. Our total purchases, there was nothing else that needed to get added in. Notice, though, that I always put my numbers in brackets just in case there is anything else that I need to use. The carriage would have been 2,500. And obviously, closing inventory needs to be subtracted. Always make sure that it's got brackets around it to show that. You would then work out that your direct material cost is 30,000. This then needs to go to the manufacturing statement, which is over here, number 4. We can put in the 30,000 over there immediately. The manufacturing overhead costs, you can work out your indirect, your consumable stores as 3,125. Your indirect labor for the cleaner will be 27,000 and the rent will be 24,000. When you add all of these together, you should get a total of 54125. And again, we take that down to the manufacturing statement. And then over here, we can now work out the direct labor costs as 54,000, which means that your total prime costs are 84,000. You can then take the prime cost plus the overheads, and that gives you your total amount that was spent on the factory in this time, which is 138,125. Add your opening work in progress, subtract your end work in progress, and your manufacturing cost of the finished goods is 135,000, which we can then use over here to calculate the actual cost per blanket as 1,350. Whenever you're doing a calculation and you need to get a final answer, always show the correct units, in this case rands, or if you're doing percentages, show a percentage, etc. We've already calculated the rest of it, and so our answers are finished. The only thing that we need to do is show that the break even is the 95.